Hello everybody. So today I want to talk about Opendoor. Opendoor is a stock I haven't covered in months. And I titled this video My Most Controversial Stocks because I remember, 8 months, 7 months ago in the early days of the channel, some people would tell me this is going to zero, this is going to go bankrupt. What's wrong with you for even talking about this stock? And a few months back the stock was at $5. Now it's at $3. It between 3x and 5x compared to the November lows for this stock. When I was publishing more heavily about it. Doesn't really matter. I don't care about short-term gains. I care about long-term gains. And when you read Opendoor's latest shareholder return, this is what they say. Today, around 1% of the 1.9 trillion U.S. residential market, and that's the one of today, transactions. 1.9 trillion of transactions, only 1% of those are done today. And my estimate is that Opendoor is like 70% of that 1%, so 0.7 is Opendoor. And then OfferPad and the little competition is like the remaining 30%. But it's very telling. It's very telling that this business is just not even 1% of the total real estate transactions out there. It's telling because it's a broken system. It's a very broken system, and there's few sectors that I can think that are still operating like they did 70 years ago. And the real estate world, the real estate sector, the traditional home purchase process is the same way as it was done 70 years ago. And it will be disrupted, in my view, make no mistake, it will be disrupted. And I believe Opendoor is best positioned to disrupt it. Maybe another company will come around if Opendoor doesn't work out, but someone will disrupt real estate. There's no fields that I can think of that are more rent-seeking than real estate. Real estate is the very definition of rent-seeking. Some might call it theft, I guess, and I wouldn't have a problem calling it theft. Opendoor is attacking that 6% listing fee. Like, it makes absolutely no sense. Why would you pay 6% for selling your house? I mean, most people selling their house don't even pay capital gains, right? If it's your own home, you don't even pay capital gains up to $250,000 in the U.S. So why would you have to pay 6%? I mean, this is a tax. This is nothing else than a rent-seeking tax because of an old system. There is no reason today to pay 6%. And attacking that 6%, if you just take away 1% off of that 6%, you can create, $10,000 worth of value for the home seller and the home buyer because these fees, these realtor fees, that economic add-on, that added cost is kind of paid by both the seller and the buyer. It just so happens that within the transaction, it's the seller that ends up financing it nowadays in the U.S. But make no mistake, the homes are priced higher because there is that 6% fee that really we don't need today. We really don't need today. With perfect information, with free information, you don't need to pay that fee anymore. But yet, the system prevails, the system remains, and we yet have to find a tech firm that is disrupting that. And I think Opendoor is a big shot at disrupting that. I've used Opendoor twice to sell a house and to buy a house. And I found it, I thought, when I used it, I thought, I will never ever go back to a traditional system. There's nothing better than this. I mean, it's great. You have an app, you close in 2.5 to 3 weeks, and then you buy and you make like a cash offer. It's so amazing to me. You have no pressure for using a realtor. You can just use your app and get in the house and visit a house with no pressure, no signing any representation agreement, whose sole purpose of a representation agreement is to make sure that if you buy a house, you give that commission to the person showing you the house. Anyways, let's think about this more deeply. Most of the home search process today in the U.S. is done online by the buyer. This is a fact. Unless maybe you're more of an old school buyer and you're not going to be using the internet. Most of the online search process today is done by you, the buyer, online. On Zillow, on the MLS, on Opendoor's website. You do it all online. Even searching for schools, all the information is online. And, home search used to be 30% of the job of a realtor. So that part today is gone. So why do we keep paying that part while really there's no more job done by the realtor for that part, the only job done by the realtor for that part is sometimes opening you access to those houses. But Opendoor is disrupting that with apps, right? If you have an Opendoor app, you can open those realtors' locks on your own. You just show your ID, take a picture of you with your ID with the app has your ID, and then they send a ping to your phone, and you can just unlock a house and visit the house on your own. No pressure, nobody's in a hurry, nobody's talking to you, convincing you into buying the house. Anyways, so the first step really of that disruption to me is attacking that 6% listing fee and removing the 1% part of the fee that corresponds to a realtor sending you leads and sending you houses to see. And of course, the second step will be to look at the seller's agent commission, which to me, there's no point of the seller's agent commission to be 3%. I don't have any issues seeing it at 1%. There's no reason. There is no reason. The advice given today by the modern home buyer, the modern savvy home buyer can just search for things online on their own, or they can just use an AI that tells them everything they need to know. That whole advice component is going away as information is becoming flat. Information is free and flat and easily accessible, and you can just get an AI to ask for that information. So that knowledge of the market you can just get through an AI. Maybe I'm a little more forward-looking, but it's just the way it is. It's just the way it is. And let me be even bolder. I wish, and I know in some very expensive market this exists, but I wish I could just pay for an agent if I need an agent hourly. Like, charge me $70, charge me $100, charge me $100 an hour just to talk to an agent. And then don't charge me 6%. I just want to pay $100 an hour if I ever have a question to an agent. That's it. That's all I want to pay. I guarantee you would collapse the costs of buying a home by 95% if anybody just paid hourly for the amount of time they spent with their agent. That would be a much more fair way to do. And by the way, that's the way Opendoor does it. Opendoor has tour assistants. They pay their tour assistants when you have to see a home and the home doesn't have that smart lock that you can unlock with your phone. They send you a tour assistant. The tour assistant is a licensed realtor. They're getting paid $25 an hour, and they don't ask you to sign anything to make sure that you're represented by them. The disruption of real estate agents is very obvious to me. And just like used car salesmen are going to be disrupted, real estate agents are also going to be disrupted, in my view. So what does Opendoor do? Opendoor is a sell now, buy now platform. It's important to say it's a sell now, buy now, not a buy now platform. Why is it a sell now, buy now? Because what you find is that most real estate transactions are done by people who have had homes before. The average American buys a house 7 times in their life. So most home transactions are done not by first buyers, right? By first-time homeowners, first-time buyers. That's not most of the transactions. The bulk of the transaction is done by people who have owned homes before. So it's a sell now, buy now platform. And Opendoor's vision is to cut out the middleman by buying and selling homes directly with minimal use of real estate agents. Everything is done in the app. It's the same story as banking. It's the same story as buying a car, right? When you bank with your app. You don't go to see a teller anymore. When you buy a car, you just buy a Tesla online, or at least that's the future. You don't have to talk 5 hours to a dealer. So why do you still have to talk to a realtor for sometimes months while you could just do it online in your app with a chat box and an agent? And Gen Z doesn't like face-to-face conversation. The next wave of home buyers, the next folks who are going to buy 7 homes in their life, they don't want that relationship with a real estate agent. They want to deal with an app. They're the Amazon generation. They're used to the buy now button. Well, it's technically a reserve now button for Opendoor. Well, when you click and you just pay a 1% fee, a reserve now button, but it's the same process, right? Opendoor still has to use agents, unfortunately, for many parts of the process, because just like Tesla is currently fighting the dealership model, and it gets ridiculous where sometimes they have to open, dealerships in Indian nations, because that's the only way that Tesla can have dealerships is they have to open in Indian nations because dealerships have passed laws, right? Opendoor is doing this fight against all of the laws, all of the rent-seeking laws that have been put in place that force you to use real estate agents. So they often still have to use real estate agents. But oftentimes, Opendoor is fighting this real estate industry. And to me, my view is that processing a transaction of real estate in the future should be as easy as buying on Amazon. And you know, the narrative of you can't buy a car online, this is totally ridiculous. Don't buy a car online. You need the advice of a salesman at a dealership. That narrative, of course, is breaking apart today. What I'm thinking, and to me it's very obvious, is that the narrative of you need a realtor, that narrative will break apart when you have free information online. So what does Opendoor do? So when you buy a home with Opendoor, it's really great. You go into the Opendoor app and you just decide to be represented by the Opendoor app. And actually, you don't even sign a contract. You just have the Opendoor app, and you're not tied to a realtor. You're not tied to paying that crazy fee to a realtor. You just use the app. Actually, the app is wonderful. You can search on your own. You can enter homes and visit homes on your own without having to sign a contract with a realtor. You can visit a house without having to sign a contract with a realtor. If you've bought a house before, you know that typically when you want to see a house for the first time, the first thing they want to do is have you sign that contract. And sometimes you get away not signing that contract, but if you want to see another house, they'll make you sign that contract. That representation agreement, which you can't back out of. Anyways, so Opendoor is not doing that. Opendoor, if you want to see a house, most of the time you can use your smartphone, unlock, and enter and see the house. All they need to know is your ID in case you break it, but that's it. And of course, you can enter a lot of homes. A lot of homes on the MLS don't allow you to, don't have these keys, right? Because they're a little old school, so they don't have these locks. So oftentimes, if you want to see a house, they'll send you a tour assistant, and the tour assistant is oftentimes a licensed realtor, and they'll just open the house for you, and they get paid $25 an hour. It's the Uber for realtors. In my view, it's so much better. And they used to have, when I did it in 2021, before the whole madness of COVID, not COVID, but what is it, of the 2020 events, before this whole madness, what they used to have is they had the 1% cashback for buyers. They had 1% cashback for buyers at closing, where you would get 1% back. So you were actually paying only 2% for the buyer's agent. And you also had cashback offers, and they right now they're kind of in hibernation mode, so they don't have these anymore. But they will have these. But it doesn't matter if they don't have these anymore. Like in my view, the fact that you're not locked in with a real estate agent if you go through Opendoor is big enough of a selling point. Now, of course, what they seem to have refocused the business on right now is selling your house to Opendoor. And what happens is you sell your house directly to Opendoor, and you can close under 3 weeks for 5%. And really the key to Opendoor and closing under 3 weeks to 5%, to just under 5%, is they try to offer you a price for your house that is as close as to what you would get into the market. And it's that algorithm that tries to give you a price for your house as close to the market. Now, of course, recently Opendoor has been offering less for houses because the market is more difficult. But nonetheless, you still save a tremendous amount of time because you can close in under 3 weeks. And if you've sold a house before, it can take 3 to 5 months to sell the house, depending on the type of house. You have to cater oftentimes to the financing needs of the person trying to buy your house. Or you can just use, if you want to go through the traditional process, you can just list your house on Opendoor and just pay 5% instead of the usual 6% that you would have to pay. And where Opendoor really shines is for the bulk of the market, which is people already have an existing family house and they want to sell it and they want to buy another house in the same time. And this is where Opendoor really shines, because it allows you to coordinate your selling and your closing. So you sell your home to Opendoor and you buy a home with Opendoor. And because of that, you just have to move once. You never have to use a storage unit. You never have to move twice, once from your house to the storage unit and to the storage unit to your house. You don't have to go out and get 2 mortgages. You don't have to rent an apartment. You don't have to rent an apartment. You don't have to do any of this stuff that you would have to do in the traditional process. In the traditional process, if you want to sell a house and buy a new house, you either have to get 2 mortgages for a little while, or go back to apartment renting and do 2 moves. So you don't have to do this with Opendoor, which I think is the bulk of the disruption. That's where the bulk of the disruption is going to come. Most home buyers have previous homes that they're trying to sell before they move on to the next home. That's the way it works. So Opendoor, what is Opendoor doing right now? Opendoor is hibernating. That's what they're doing. You know, Opendoor overpaid for homes in Q2 of 2022. And they did not anticipate the Fed 120-degree turn, right? They didn't anticipate that the Fed would raise interest rates so fast. But it's worth mentioning that, you know, what CNBC, I remember in November, I always say this, but I remember in November, CNBC in November 2022, they were pounding the table at Opendoor going bankrupt. And they were just having fun on the set. And the stock was trading at less than $1. And they were having fun on the set saying, yeah, this company is going bankrupt. Having fun on the set. For a whole 20 minutes. Like, I bought Opendoor that day. I remember it was a Friday morning, and I bought Opendoor. I think it was at around $1, just to make a statement. Because I was like, have you looked at the balance sheet? Like, can you read the balance sheet? Like, do you realize what you're saying? They were just pounding. This company's going bankrupt. This company's going bankrupt. Anyways, it didn't go bankrupt, and it was clear to anybody looking. And they also, you know, they did their mistakes. So this is, if you follow my channel, it's kind of like StoneCo. StoneCo did a major mistake. The stock got punished, and now the market has to re-rate them. Well, Opendoor is kind of the same thing. They had an issue with their AI. They didn't anticipate the Fed. I don't think anybody could have anticipated the Fed. They didn't anticipate the Fed, and so they overpaid for homes in Q2. And as a result of that, they had quite a bit of losses. But when you consider that now, right, by the end of the Q2 quarter, 99% of their Q2 cohort of last year is sold or under resale contracts. So that means that mistake overpaying for homes is behind them. And since they've adjusted the algorithm of buying homes, since they've adjusted that algorithm, they're doing much better. And Opendoor is, of course, amazing because you can sell your home directly to Opendoor. That's why a lot of people have called these iBuyers. But I think it's just a reducing picture to call them iBuyers. In my view, they're much bigger. It's a much bigger story than iBuyers, as you'll see in a minute. But for me, in my view, it's a much bigger story than iBuyers. So Opendoor fixed its algorithm after Q2 of 2022, and now post Q2, right? That's why they make a big deal out of a Q2 cohort, which by the way, yeah. So they lost 8%. Their gross loss was 8.9% for a Q2 cohort. Now you see once they adjust their algorithm, now the gross margin is 14.7%. And of course, because they're in hibernation mode, you know, they went ahead and did their best to save the business. Now, of course, revenue is going down, homes sold is going down. You know, this is a company that's idle right now and not doing much, waiting for them. Waiting for the Fed to drop interest rates and waiting for the market to stabilize, because of course the Fed has shattered the real estate market. It's a mess right now. It's a mess. But real estate will come back. I mean, real estate will absolutely come back as monetary printing resumes. And this is kind of one of my monetary printing plays, is as monetary printing resumes, this is a company that in my view could do very, very, very well because real estate is going to come back. And so let's assume this. Let's assume that just like in Q2 of 2022, which was a great quarter for them, they had 4.2 billion. So let's assume 4.2 billion in revenue, right? That they earn from buying and selling homes. So let's assume that revenue that they earn. Let's assume that it's 16.8 billion per year. So that was 4.2 billion per quarter. So let's assume it's 16.8 billion per year. That is the revenue. That is the amount of real estate that they sell and purchased previously from home sellers and now sell it. So that amount, 16.8 billion, you multiply it by 14.7% gross margin, and you get a 2.47 profit in gross profit, 2.47 billion. And of course, the current enterprise value of Opendoor is 4.12 billion. So very, very, very cheap if it were to just get back to what it was last year. if this company were to just get back to what it was last year, which I believe, because I believe real estate will come back, right? It all converges. My belief is no, I don't believe any of the headlines. I do not believe there will be a crash in real estate. I do not believe interest rates will stay this high. This is not possible. This is not possible, right? The U.S. government is going to have a true $2 trillion deficit. Who's going to buy that deficit? It's going to be the Fed. It's going to be QE. Real estate will come back, in my view. So if you pair this belief with the rest of the belief, which is the business will resume, you get a very easy picture with almost $4.5 billion in gross profit for a current enterprise value of $4 billion. So this means that the price would be 1.66 EV over gross profit. This is as cheap as HIMS and as StoneCo, as cheap as both of these companies. But the potential, of course, is not 16.8 billion, because 16.8 billion, as I've mentioned earlier, that would be actually only 0.8% of the total addressable market. The total addressable market is 1.9 trillion. So that's 0.8%. Do we really believe that this company, Opendoor, can only achieve a fraction of a percent of the sales? What if Opendoor actually captured 10%? And remember 2021. In 2021, Opendoor was thriving across the USA. It was opening new towns all over. Many agents were very worried with Opendoor. Some asking for more regulation, like you would do when you're a rent seeker, you would ask for more regulation. Some saying that it's overwhelming. Every single home seller wants to sell to Opendoor and not sell through agents anymore. There's no business for agents anymore, because that's how good the business was. And they used to say, it's because Opendoor overpaid. No, Opendoor did not overpay. Opendoor did not overpay. Like if one does not think the average single-family homes in America will be worth $1 million within, 12, 13 years, I don't think you are aware of what's happening with the denominator and with the devaluation of the denominator, with the devaluation of the whole US dollars. Single-family homes, we can only build about 1%, less than 1% actually, new single-family homes each year, right? What if we have a year where we print 40% more dollars, right? We create 40% more dollars in 1 year, and we can only create 1% more homes. What's going to happen to the price of homes? It's going to go up 40%. It's very obvious to me. And Opendoor was a much better product. It was thriving because it was a better product, because the product was one order of magnitude better than going through a real estate agent. It's so much better, That's why it was thriving. And so remember that. And the market will get back to these levels, in my view. How many times have we gone for real estate saying market will not come back? No, the market will come back, because real estate is directly correlated with monetary printing, right? Real estate, technically, real estate should go down every year. If we had sound money, the cost of real estate would go down every year. Not by a lot, but it would go down a little bit every year, because efficiency improves and efficiency in construction techniques improve. But because we have monetary printing, which, by the way, much of the monetary printing happens through the mortgage process and the mortgage underwriting process, right? Whenever you get someone in your community, they get a $500,000 mortgage. That $500,000 mortgage that they gave to the seller is being injected into the money supply, into the community, right? We have a fractional reserve banking system. We don't have a banking system that's backed $1 for $1. Anyways, this is off topic. Sorry about that. So anyways, real estate, in my view, in my view, we will see a day where real estate, the average home is worth a million plus for the average American house, and it's very obvious to me. And is it going to be just under 2030? Is it going to be 2029 or 2032? I don't know. But to me, it's very obvious. It's like people are amazed by how many doublings real estate can do. Well, it can continue. So, anyways, let's assume that Opendoor achieved 10% market share. A 10% market share. That's 1.9 trillion right now. of sales, of real estate sales each year. There's 1.9 trillion of real estate sold each year. It's the biggest market in the US. There's no bigger market than real estate. It doesn't exist. Biggest market, 1.9 trillion. Let's assume they do 10%. So Opendoor does 10% of 1.9 trillion at a 14.7% gross profit. That's 28 billion gross profit in 1 year. And if you do the net margin, 20 billion in net profits in 1 year for a company whose current enterprise value is 4 billion. So I'll give you a hint. The multiple when that happens, if that happens, and I think it will happen, I'm very bullish on this company, but that if this happens, the multiple will not be a multiple of 1. Which, if you had a multiple of 1, you definitely have a multi-bagger, right? You have a 5-bagger, right? If the multiple will be a multiple of much higher than 1, in my view, and of course, and this is where this math gets crazy. So let's assume the average home in the U.S. Is $1 million, which would be perhaps more than just even this conservative assumption. Let's assume the conservative assumption that the real estate prices in the U.S. double by 2030. Let's assume that they double by 2030. Then the market, of course, would be 3.8 trillion and not 1.9 trillion. So if the market is 3.8 trillion, then Opendoor only needs to capture 5% of that market. And remember, today we're roughly at 0.7% market share. So we only need to capture 5%, right, of that market. So it's tremendous. And this is a topic for another video, but I'll quickly talk to you about this, which is what do we know about the nature of platforms? And Opendoor is a platform that, at its peak, in my view, when the real estate market was not broken. It's easy to blame Opendoor and say Opendoor is a broken company. No. It's the real estate sector that is broken right now. When the real estate sector is not broken because interest rates correspond to reality, this company was 1 order of magnitude better. This company was thriving. And this is why I'm losing my voice. I'm sorry. This is why I'm so bullish on this company, and this is why I think this company, the proper frame of analysis for a company like Opendoor is Amazon. That's the proper frame of comparison, because the nature of tech platforms like Opendoor's tech platform is to achieve a monopoly style disruption and domination, and so to think that Opendoor will get 5%. It is an understatement. They are the leader in the iBuying space. If iBuying becomes a thing, Opendoor will not be of 5%, will not be 10%. It might be much, 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 much higher than that. I'll conclude with this. Did Uber take 10% of a taxi market? No, it disrupted it entirely. It has like 60-70% of a rideshare market, because that's how platforms work. Airbnb. Did Airbnb disrupt? How much did Airbnb disrupt? Well, Airbnb right now disrupted about 10% of the hotel market. They're still growing like a weed. Are they going to disrupt 50%? I don't have a problem imagining that. They could entirely disrupt 50%. They could disrupt more than that, right? Airbnb is going after the mom and pop rental. And then traditional real estate agents and brokers. Are they seeing it coming? Are they seeing this disruption coming? Are they seeing that actually it could be the entire MLS that is disrupted, the entire system that is disrupted, because all of a sudden sellers of homes and buyers of homes want to use an app, a platform, just like they're used to with Uber, just like they're used to with Amazon's marketplace, just like we're used to with Airbnb. They just want to use a platform to do business with. And they don't want to go through a traditional rent-seeking process because they're tired of rent-seeking. Are the traditional real estate agents and brokers seeing it coming, right? Like the taxis saw it coming. Like the car dealerships are currently seeing it coming for Tesla. Like cable is currently seeing it coming with YouTube and streaming. Well, that disruption is mostly done. Like AT&T and Verizon are seeing it coming with Starlink. Well, that disruption is upcoming, but it is coming. It is upcoming, but it's going to be there. People are going to cut off the internet at their home, and they're just going to get Starlink, and they're going to cut up their cell service, and they're just going to go with satellite. It's already happening with the new iPhone, where you can get roadside assistant by satellite. It's already here. Are utilities seeing the disruption coming in the energy market, with every home being a producer? Are companies like Enphase and SolarEdge going to be utilities that just sell electricity and disrupt? Right? Are consumer banks seeing fintechs coming, etc., etc., etc.? And it's funny because I don't think they're gonna see it coming, and I think this is why this company is, like I said, my most controversial stock. Heavily debated. I expect most of you in the comment section telling me I don't know about that one, and that's fine. And it's under 1% of my portfolio, but I have not sold a single share. I have not sold a single share of my Opendoor, and I'm not gonna sell. And actually, the losses on Opendoor are way less than they used to be. If that makes any sense. I'm actually only down. I'm only down 30% on that stock now, at the current level. So it's not so really. It's I'm not down 95%. I'm only down 30%, which some companies that have a much greater consensus are down way more. This is a company whose expected value is technically very, very high, because even if you assign a 1% chance of success to this, of course, I mean the profits would be so overwhelming, so tremendously high, that even if you assign just a 1% probability to this, the expected value, the EV analysis on this type of stock, to me is absolutely outstanding. Anyways, this was not investment advice. This is just entertainment. I realize this is more of a rant style video today, but and I was losing my voice, so I don't know what's going on with me. But anyways, no investment advice. Thank you so much for watching. Appreciating your likes here. Please subscribe to the channel and follow me on X if you can. Have a wonderful day.